Good afternoon. Thanks, everyone, for joining us. We have an update today with Millennial Precious Metals with CEO Jason Kosec, who's going to go over the drill results they put out this morning, as well as a bit of an overview of the company and an update. For anyone that's brand new to Millennial, I would suggest checking out some of the previous webinars that are on the Adelaide Capital YouTube channel. And anyone that's really unfamiliar, feel free to reach out and we can set up a call with management. As always, this presentation will contain forward-looking statements. You can find out more about those on the company's website. And there will be a Q&A section, so feel free to enter your questions in the box at the bottom of your screen. And with that out of the way, I'd like to introduce Jason Kosec, CEO of Millennial Precious Metals. Hey, Jason, how are you?
Good. Yourself, Deb? Thanks for everyone for joining and thanks for setting this up.
Yeah, great results this morning. Looking forward to getting an update.
Awesome. Well, we'll just do a quick corporate update from the cash position, go over the recent drill results and really what are going to be the main value creators for the remainder of this year and into next year. Quickly on the cash position, as most of you may or may not know, we were fortunate enough before the market took a turn for the worst earlier this year. May, we were able to raise $16 million, 16.1 to be exact. The raise was done at 40 cents with a half warrant at 55. It was all our major institutional shareholders basically increasing their position. Right after that, we made a $2.5 million payment to Waterton as a milestone payment. So currently the cash balance sits around $10.8 million. Quickly from today's release, and I think it's important to remember that as much as exploration companies are in the business of adding ounces in a systematic scientific manner, we're also in the business of risk mitigation, okay? And that's really what these programs were designed to do. And what were they designed to do? To do the geotech, to do the metallurgy, to see what the conversion rate was, to see where the resource was open. And as most of you may or may not know, in Nevada, there's two types of exploration permits. There's a notice of an operation and a plan of operation. And right now we sit on a 5-acre notice permit. Okay. So literally 5 acres of 17,000 acres. And that's all that these projects ever had. Okay. So before we did a massive mapping and sampling program over the summer, we identified multiple of these magmatic hydrothermal vents that control the main deposit at Wildcat. And have been surface samples and samples rating from 0.1 all the way up to a gram. They sit outside the current pit shell. But before we go to drill those and allocate a lot more capital from a drilling perspective to show the real scalability of this project, we wanted to answer these questions and really remove the, so to speak, showstoppers before you start bigger drill programs. As you know, this is the current pit shell that I'm just highlighting here. All these high-grade blocks are not in the current pit. As you can see, hole 4 was, the grade continuity is spectacular, 40 meters of 1.6, 41 meters of 0.9, extending. This is the red line is the current pit shell, so extending the oxide pit significantly. And today's holes were 120 of almost 0.4, 50 of 0.5, and 42 of 0.87. Again, hole 10, for example, was designed as a geotech hole. So basically the last hole that we had, historical hole, was this guy right here. So we needed to test the northern pit wall for pit stability. We also believed that from a geological level, we were using this geotech hole as also an exploratory hole. And as we believe that the mineralization plunges to the northwest and has never been tested out that way. And what do you know? 42 meters of 0.87. The resource grade is 0.4 here. And as you can see that there's literally mineralization right at surface. Hole 6 was an infill hole, beautiful high grade zone right at the top of 1.3 grams. And then the other interesting thing is that the oxide material, again, extends the pit shell by another 50 meters. So everything we're doing here is removing, like I said, the geotech, the conversion, and in really seeing where it's open and where it's closed off. And right now what we see is completely open to the northwest, never been drilled, and is the oxidation profile consists well below the pit. Okay. And why are we doing this? Again, you're asking a resource geo from that hole to this hole to this hole to predict the blocks in this gap. So to understand the conversion rate in the geostats, we have to infill a hole like that, and that's really what we mean by conversion. Okay, quickly, this is the current pit. Okay, there's gaps in it because of the permit. When we took over the project, there was only 4.6 acres of disturbance, so we had minimal area to play with. Within that area, there's 6 historical little mines. The other thing is that there's another 26 on our property that have never ever been tested since the 1900s. So again, the scalability of these projects is significant once we have the full permit. I'll just quickly skip to the highlights. I think what we do is we believe in systematic, scientific, but aggressive exploration. As most of you guys know, and ladies on the call, we've gone public on 2 exchanges. We've drilled 3 projects, put in 20,000 meters, done 2 resource updates. Most importantly, built a team. Total cash raised since inception over a year and a half ago is 16 million. And what we'll really show over the next coming months is removing those key risks. And what you'll see is continued drill results coming from Wildcat. There should be 1 or 2 more batches. And again, we try every 3 to 6 weeks to put those out. Then you'll see results from our regional mapping program, which will show the scalability of the project. Then you'll see the metallurgy from Mountain View. We did 4 columns, 15 composites, 40 bottle rolls. So really feasibility level met work. Then you'll see the met work from Wildcat. Again, we did 5 composites, 5 columns, 15 composites, 40 bottle rolls. So going above and beyond a PEA level. That will then feed into the updated resource in early next year. And that resource will then feed into the PEA later in the year as well. And we will also, by middle of next year, have the exploration plan of operation to show the real scalability of this project. I think it's also maybe pretty important to just touch on this, and just so everyone remembers, is that there is a serious chess match going on in Nevada, and you're seeing Richard Wark buy reward from Waterton. You just saw Anglo purchase one of Coeur's assets, and really there is nothing out there like what we have at Millennial. And you're looking at the highest effective open pit oxide project in Nevada. As some of you know, GSV just got taken out. Orla bought purchased them. Their resource was 1.3 million ounces. We're sitting at 1.2 with a much higher effective grade. The purchase price, I believe, was for 230 million. And you might ask, why do we sit at $50 million today? They were a company that's been around for 10 years doing all this risk mitigation. We've been around for a year and a half. And by the early of Q1 next year, all those key risks will be removed. And then we can show really the scalability of how big these deposits can grow. And, Anglo's acquisition of Coeur's project was bought for $165 an ounce. We're trading at $20 an ounce. Again, why is that? Those ounces get re-rated once you submit your mining plan of operations to the BLM, and then that goes to NEPA, we should have that, all the detailed engineering submitted by the end of 2023. With that, I'm gonna, like I said, keep it short and sweet and really open the floor for questions for everyone out there. And thanks for listening today.
Just to keep things running smoothly, I think I'll go through the questions in a thematic way. So starting with geology. So anyone that has some geology questions, feel free to input them in the box. I did have an audience question about hole 10. So perhaps we can start there, which was in hole 10 is the 42.7 meters at 0.87 grams per ton oxide. Oh, yes. Is it oxide? If so, do you see opportunity for the oxide sulfide boundary to be moved lower?
Yeah, so as you can see in the image below here, it is that intercept is all oxide. So what we see happening, and again, same with hole 6 here, is that oxide boundary, which currently sits right here, will be pushed down 50 meters to take in all this oxide material. What will happen with hole 10 is that the current pit shell is this line. So what will happen now is that pit shell line will come to take all that.
And you can include that in the upcoming resource update?
Yes, we can include all this drilling will be included in the 2023 resource update. These are the 2021 pit shells that were used with all the historical drilling.
Okay. And then I had another question about hole 10, which is this intercept related to a potential feeder zone? For example, similar to hole 7 that intercepted acidic alteration and solidified breccia, or too early to tell? And sorry about my geological pronunciation.
It's all good, Deb. So yeah, these are what we're seeing is as we get closer to the north side of the pit, and as we get further down, is the alteration and the amount of hydrothermal brecciation is becoming more intense. And you're seeing the switch from kaolinite to illite. So that's indicative that you're getting closer to the boiling zone. So commonly, you have these nice caps that, like Sleeper runs 0.5, 0.4, and then you get into these hydrothermal breccias. And then commonly what we've seen throughout the property, the veins actually develop. All this purple material is a Cretaceous diorite, and the veins develop in that diorite. So there is a geological diagram of this. So this is what we're really looking at, is that right now we're really just sitting on one of these little vents. We've identified 6 other vents on the property, and these plumbing systems, you show this is the schematic, have never been drill tested. And why do we know that we sit right up here instead of down here? Is because we actually see fossilized tree branches and leaves. So that's very indicative that we're on top of the paleo surface, so that the whole system is still preserved. And there is not a hole drilled deeper than 156 meters. Okay. So again, the plumbing system on how these things form has never been identified. And primarily because all the old drilling was done with RC. So to identify magmatic hydrothermal breccias in a fragmental rock is very, very difficult. So we elected to do all core so that we could get a better understanding of the controls of mineralization to help us vector into these plumbing zones in the next phase of drilling. A long-winded answer, but I hope that gave better context.
That makes sense to me, Jason. Thanks. And then I had another question about holes 6 and 7. So the press release this morning mentions no overburden coverage. Is this less than what's currently modeled in the resource, which is very low at 0.16 or in line with current estimates?
It's in line. So the life of mine strip is 0.16. And the beauty about hole 6 too is that you have a nice high grade zones right at the top. And as you see, this is the topography. It's literally everything is right at surface. And from a permitting perspective, as we go start that process, the whole idea was to in this business, that permit gives you creates a lot of value. So as we go through this permitting process, one of the things that we've identified talking to the state BLM and to the governor of Nevada is that because there's no waste rock here, you don't have to permit a waste rock facility. And because we sit on the top of a hill, we won't intersect the water table. And what does that mean? That means there's no paleo pit lake. And that, so we can permit this under an EA instead of an EIS. So you're looking at by the end of 2023, early 2024, basically a year to a year and a half for a mining permit. And during that whole time, what we've decided to do is permit the base case 8 years of mining. But then while you're in the permitting pipeline, most companies just have a lack of news flow. Well, what we'll do is that when we're in that permitting pipeline, we will continue to step out and grow the resource. And then you do a permit amendment later on.
Makes sense. And then I had one last geotechnical data question. Can you speak a little to how, with a core drill program, you're looking to reassess the pit slopes in the current resource and how that can potentially impact the resource in terms of grade?
Yeah, so the geotechnical program is basically to understand the rock mechanics. Okay, so what it does is for this project, it's quite simple. The pit walls, you can make them quite steep, but what happens is if you have really competent rock like we have, you could push your pit wall to 50 or 45 degrees. If you don't have competent rock and you got to change your angle to 35 degrees, what happens is that now you have to take in more waste rock in the pit walls, which will drop your grade. The beauty is that when we drill into the pit wall, we're finding high grade mineralization continuing into the pit wall. So what's going to happen is once we get the bigger permit, we're going to have to drill another hole for the geotech purposes. And you need to use PQ core to understand the tensile strength, the compaction, and the RMR and the RQD and all that sort of fun stuff.
Okay, and you spoke a little bit about the submission of plan of operations and the timeline for that. Do you have any guidance in terms of approval and how this might change your exploration strategy at Wildcat?
I wish I could give you a definitive timeline. Everything, all the baseline work is complete. We'll submit it at the end of the month here, and then it's anywhere from 6 months to a year. It's out of our hands, and it's in the hands of the government. But what we've done is we've gone above and beyond, doing all the baseline work, doing all the cultural work, doing all the environmental and biological work, and doing what was more of what was asked for, really.
Okay. I had a question from the audience just on Nevada gold costs climbing at an alarming rate. How much of your production is open pit versus, or how much of your anticipated production is open pit versus underground? And will that impact prospective acquirers? So
everything right now is open pit. And the only way it'll change is when we find a feeder zone. Like at Mountain View, for example, one of the high-grade veins that sits underneath the breccia is a meter of 141 grams. You're not gonna open pit that. and the breccia at Mountain View is 40 meters of 4 grams that sits underneath the pit. You would go underground at that time. But for Wildcat, everything is open pit. Mountain View, everything is open pit for right now. The big costs that have really changed is the cost of explosives. So commonly per ton of explosives, to purchase a ton of explosives is about 58 cents. Because of the war in Ukraine, where all of the ammo comes from, costs for explosives are over $1 a ton. Okay. Obviously, the price of gas is up. What we're doing to mitigate that is we will have electric haul trucks, so they'll go down the hill loaded and come back and charge and come back up empty. And as we scale up, might put in a electric conveyor to reduce our emissions from a cost perspective, but also from an environmental perspective. Costs in Nevada, especially when you go underground and you're doing big developments, you're using more explosive, you're using more people. So those costs have gone up substantially. The cost for bolts and split sets for underground mines have gone up substantially, just like the cost for drill rods have gone up. But luckily for us, this is good rock mechanics. This is an open pit project. So, it's really just the explosives in the fuel price that we really need to worry about. And to mitigate that, I hope that the war is not going on in 2 years' time when we start building this. And the fuel costs, we just use conveyors or electric trucks.
What about your current costs, like for drillers, for labor, for things like that?
Yeah, in Nevada, it is, in the Great Basin alone is one of the most expensive places to drill. Okay. So you're looking right now, average about $750 a meter to drill. You can talk to other companies out there that drill in the Great Basin, and you're looking some costs when you drill Carlin style systems, like railroad is. Cost can be up to $2,000 a meter, because in Nevada, it's the only place in the world I've ever worked where it's not an all-in cost per meter, it's by hour. So how we reduce that cost is really doing limited core drilling, so we can understand the geology and understand the conversion in the pit. And then when we step out to lower the cost, we'll just use an RC program, drill it on 100-meter centers, because 100-meter centers we can get inferred, and we don't infill it because basically it'll cost you more money. So limit the amount of really core drilling, just to as much as we really need.
And rig availability, I assume, is a lot better than it was in 2020 and 2021.
There is plenty of rigs available now. But, again, you need to be very conscious from a cash perspective of what you really want to drill, right?
And in the release this morning, you talked a bit about the test work that's planned for metallurgical studies. Can you talk a little bit more about that and when those results might be available?
So we have preliminary work from Mountain View already. We're waiting for the final report. That will be out mid-November. And like I said, what we did is 4 columns. In the columns, there was about 12 or 15 composites. I forget the number of composites per column. Commonly for a PEA, you do 1 column, okay? And then we did 40 bottle rolls. Commonly for a PEA, you do 10. All that Mountain View met, like I said, will be middle of November. Wildcat, the last column just started. We have preliminary work from the first column in the first bottle rolls, but the last column probably will need another 3 to 5 months to see that. But we can put out preliminary bottle rolls in the new year.
Okay, and maybe you can provide a bit of an update on timeline and guidance for the resource and PEA.
As soon as that last column comes back and we have the full MET report. So like I said, 3 to 5 months from now, we can then do the CapEx optimization, which would take about a month to 2 months. And then that would then feed the resource in the PEA. So it could be anywhere from, 5 months to 7 months is depending. And again, this is, I would love to say it's this date, but the reality is that because the lab was so backed up, the metallurgical lab, that pushed how long the columns were going to take, but also the drilling, because the ground gets broken up like this, the drilling took a lot longer than expected. So the material to go into the column took longer. Then the lab was backed up, and we don't know how long the leach cycle is going to take. So that's why we had to push the resource and the PEA, because it revolves around the metallurgy. So I wish I could give better guidance, but the reality is that the final met work is going to be in 3 to 5 months, then a month of CapEx optimization, then we could put the resource out, and then 45 days after we could put the PEA out.
Okay. Yeah, I think we're all familiar with some of the delays that are happening at multiple bottlenecks along the process of putting out technical studies. So in terms of size of resource, do you expect the resource at Wildcat to increase? Given
the current, the 2 holes that, push the pit shell, I think we can grow the resource, not significantly, but it'll grow. Mountain View will grow. So like I've told everyone, it's going to be between the 1.5 to 1.7 million ounces. We need to understand how much of the transition material will go into the resource, and that again comes down to metallurgy. But do I have really what we see? This image is too zoomed in, but maybe I could use this image. What we see is that the footprint is 2.3 by 1.2, and you see these little gaps in the pits. And what that is just a lack of drilling and not tight enough spacing. So, within the pit, once we have the full permit, you're looking at 2.3 by 1.2, using 2.5 for density. The oxidation profile goes down about 100 meters, 150 meters right now. Not all of that is going to be mineralized, and the strip may change, but the plausibility of just within the current footprint to push this thing over 200 million tons is completely plausible on a geological level. And current resources at 62 million tons. So long-winded answer, yes, the resource will grow, not substantially because of the current permit that we're under. But next year, as we systematically step out under the full plan of operations permit, we can then grow the resource significantly. Okay. And maybe you can take a step back or a wider view of your Nevada assets and maybe talk a bit about how Wildcat is complementary to some of your other projects like Mountain View. Yeah, so what we'll do is Mountain View and Wildcat will have their own pits, pads, and ponds. Mountain View, we will truck the loaded carbon from Mountain View to Wildcat. Loaded carbon is basically a super high grade concentrate to a centralized stripping facility at Wildcat. They're 55 kilometers apart. Mineralamos, for example, great company, great team there. They truck their loaded carbon all the way up to Metals Research in Idaho. So we're not reinventing the wheel here. Mineralamos just put out their PEA, same basically tonnage per day as Wildcat would do. They were using a $1,600 gold price and $30 million capex. Okay, and triple digit IRRs on the project, which was spectacular. So very similar to what they are doing.
Okay, and then I had an audience question, which was, given the environment in mining, especially in Nevada, using GSV as an example, do you intend to mine your own deposits yourself? Maybe you could talk a little bit about your overall corporate strategy in terms of developing these projects.
Yeah, short-winded answer is that this is in our technical and financial capacity to build these things. And companies that say, "Oh, we're going to drill these projects and do a PE and then someone's going to buy us," that's not in your control. Okay, so we're doing everything that we can to build these projects and put them into production as quick and fast as we can do it. Okay, so not taking any shortcuts, doing the full permitting process, doing above and beyond the network, because we really truly want to build, the next mid-tier producer. That being said, we go down this list of oxide projects in Nevada. Hasbrook is 50% owned by Sun Valley, so that's gone. Northern Bullfrog, gone. Pan, gone. Florida Canyon and Round Mountain are both big companies, Argonaut and Kinross. Motherlode, gone. Railroad, gone. Relief Canyon, mid-tier. Gold Bar, McEwen. Marigold is SSR. Gold Rock, gone. So when you go down the list of, projects that are above 500,000 ounces, they're all gone. They're all owned by the Anglos, Kinrosses, Orlas, people. There's a lot of companies in Mexico or Nicaragua that want NAV exposure to the US. So, as much as we want to build this and build a mid-tier mining company, the reality is that there's such a scarcity of these assets that I highly doubt that'll be possible. Like I said, once people see the conversion rate on the resource, see the economics, I highly doubt that we'd still be kicking around. And if not, great, we can put these into our production ourselves.
Okay, and then talking a little bit more about M&A in the current environment. I mean, there's a lot of companies out there that have very limited cash and access to funding. Are you looking to be opportunistic in this market with the cash that you have, with the paper that you have? Like, what are your thoughts on your current portfolio, any changes you want to make, and just how you're viewing the market right now?
Yeah, so start off with that is looking at the market right now. And again, I got to double check this quote, but it came from a reputable banker. Of the 1,600,
I didn't realize there was such a thing. I'll have to get his name.
Good one. Of the 1,600 junior companies, I believe 58% were below $2 million of cash. Everyone, these windows open up quickly and close quickly. And, we're lucky to have a great shareholder base that are very supportive. So we were able to do a financing when really no one else in the market could, other than Liberty and us for junior companies. Oh, I guess George did one later in the year, but those are quality real assets and quality companies. So there's a lot of junior companies out there that are extremely cheap, but the problem is that they have no cash. So we looked when we built this company, just to refresh everyone's mind, is we did over 337 desktop reviews. So 337 projects we looked at without the Southwest US. And did 72 site visits. So we still look at plenty of things on a monthly basis. And Jason.banducci and Raphael Duteau or VPX probably hate me for it. But we do look at everything is really available. But as I mentioned, we looked at so many projects, and it would have to be very accretive for us to transact on something, because we have such a robust and diversified portfolio of assets that we can create value within our company throughout the 8 projects that we already have.
Maybe you can give us some of the parameters of things that fit within your philosophy and your portfolio.
Yeah, I think what we're looking at is things that we have clear visibility of 1 million ounces of oxide. Okay. And, things that other companies or geologists missed, whether there was a lack of understanding on a geological level, like Mountain View and Wildcat, or whether there was a permit issue like Wildcat and Mountain View. So there is a number of those things out there that we still look at. I think looking for projects along these main trends, everyone really has the same exploration model. What you're looking for there is lower plate rocks, okay? And Red Canyon, we're lucky because we have a window into the lower plate. But when we're looking at a lot of these projects on the main trends, the exploration model is that you see nice alteration in the upper plate, therefore the lower plate's going to be mineralized, while you don't know how thick the upper plate is. And as I mentioned to everyone earlier, the cost of drilling in Nevada is expensive. So that type of exploration model is great, but let Barrick go do that, because a junior company will go broke unless you have a window into the lower plate like Red Canyon. So where we see a lot of value is looking into the basins like Wildcat, Mountain View, Mar, Ocelot, into the low sulfidation, whether it's rift, dome, or arc related low sulfidations, looking into those, or intermediate sulfidations. And I think that's where a lot of prospectivity will be had. And that's kind of where we want to focus. And not only because we see a lot of prospectivity, but, between myself, Terry, and Ruben, those are kind of our specialties.
Okay. And I guess that leads into the next question I have, which, as somebody that is, does a fair bit in the mining sector, but other sectors as well. And, I view myself as a generalist. When I look at Nevada, like, obviously it's a great place to be. There's lots of companies there, but there's just so many juniors. And I find it's hard to differentiate between a lot of them as a layperson. For some of the generalists that are watching, it might be helpful to just lay out why you're different than some of the other junior explorers in the state.
That's it right there. Very simple. Is that you need people to understand, as a generalist, Deb, mining is not easy, okay? But mining is like any other business in the world, okay? And it comes down to this, and it comes down to margin, okay? So when you have the highest effective grade, for example, railroad their strip is 4, ours is 1, okay? So you got to move that much more waste rock, and it requires that much more blasting, and that much more hauling, and that much more fuel. So all these things go into margin, okay? So when you have the highest effective open pit oxide project, we will have a significant margin, and these are quality ounces, and that's what separates us from everyone else in the industry. And just to be transparent, what we will do next is then times this by the recovery. And then you could see apples to apples of everyone. And that would be totally, that's the next step. But, at $1,600 gold price, that's $22 in situ rock. Average operating cost in Nevada is 11. So you're looking at a 49% in situ margin. Apple doesn't have a 49% margin. So, we try, the industry doesn't do, we try to do a good job explaining technical things. But, things like, grade to strip ratio, then times the recovery, and how do you get your recovery? How much you have to crush it? All these things should be talked about more from a generalist perspective, because that feeds into margin.
Got it. I had one audience question, was just about your cash position. So how long will the 10 million last? And at what point do you think that you're going to need to raise additional capital?
Yeah, so it's the next year is really what we're doing before we get the full permit, is doing all the detailed engineering so we can submit for the mining plan of operations. That is $7 million it's going to cost approximately right now, because we'll have to do the work. And if things change from when we do it, it might cost more, it might cost less. And that I don't know. So right now we can last until Q3, end of Q3. But if things change, and we get a permit earlier, or we can get another notice of operation permit, we could pull the trigger as early as the beginning of Q2. It depends on really in this market, you need to be very careful how aggressive you are. And if we see the market turning, we can be more aggressive. But if the market stays the same, we will be very cash conscious and preserve cash to get to the end of basically Q3.
Okay. And I had one other audience question, which is, can you compare your model to Liberty Gold's Black Pine with 100 million market cap?
It's a very good project. I really like it. The difference is the type of deposit it is. So that is a Carlin style deposit, a lot like our Red Canyon asset, where ours are low sulfidation epithermals. And the beauty about low sulfidation epithermals is they have the transition zone, because it has such a low sulfide count. The transition zone is commonly leachable. We will answer that question later this year. Whereas their transition zone and their sulfide zone is going to be refractory. And there's only really, two autoclaves, 2 roasters, and there's a 10-year lineup for those. Okay. And 2 companies own them, or 3 companies own them. So you can only touch your oxide portion. They've been drilling that project for a number of years, and they've had a plan of operations for, 5-7 years. We don't even have yours yet. So we haven't even shown the real growth potential. Again, with low sulfidation systems, even when you get into the sulfide zone, they're rarely ever refractory. So that's the key difference, is that really we're like a Liberty was 10 years ago. And this thing has just never been drilled.
Okay. And then I don't have any additional questions. I don't see any from the audience. Oh, there's one that just popped up. Oh, they just said great answer, which I agree. I guess the last remaining thing, and you touched on a number of your catalysts and things that are happening, but why buy the stock now? How do you think shareholders are going to make money if they purchase right now, other than a rising gold tape, which we've got 2 days. So maybe it's the start of something bigger, hopefully. But maybe just walk me through, the case for an investor.
I think the biggest thing here is this number right here from these lovely people right here. They've been working great with us. The thing is that 7.5% looks like an artificial overhang. That's the reality. Okay. But what we've done is we've been very proactive that every time there's a release date on this block, they started at 19.9%. We placed them with Franklin Templeton, with Vescor, or some other high net worth individuals, so that block never hits the market. The last block comes up November 3rd, and right away we will cross that block, and there will be no more artificial overhang. And then you have a very catalyst-rich end of the year and right through next year, with showing the leach kinetics, showing the resource, showing the true upside with all the surface sampling and mapping that will go on. And there will be no more overhang. And, we're 65% institutionally held, soon to be maybe a little bit more. So with the cash we have in the bank and the tight float we have and the catalyst, the major catalysts that we have coming up, you could sit here picking up stock at 25 cents at a $50 million market cap, and we'll be above 1.5 million ounces. GSV was 1.3, and they were $230 million. And we will be there. We just need to do the work to get there. And all that work is going to be done. And like I said, there's just such a tight float that this thing will move fast.
Well, I think that's a great answer. I don't have any additional questions. Jason, is there anything that you wanted to talk about today that we missed?
No, I really appreciate everyone for joining the call today. I'm always available. If I'm not available, Jason.banducci, who's also on the line's available. You can go book a one-on-one if people want to go into greater detail or you have other questions, you can go on our website. You can book a one-on-one meeting with me anytime, and I'm glad to go into greater detail. And yeah, thank you for joining.
Great. Well, thanks for your time, Jason. Thanks everyone for participating. If you have any additional questions, feel free to reach out, and have a great afternoon.
Take care.